This video covers Learning Objective 3, Part 1, Basics about Depreciation, in Chapter 7, Plant Assets, Natural Resources, and Intangibles. So let's get started. Plant assets wear out, grow obsolete, and lose value over time. To account for this process, we allocate a plant asset's cost to expense over its life, a process called depreciation. Depreciation expenses the cost of a fixed asset over time by allocating a portion of that cost against the revenue the asset helps earn each period. Depreciation expense is reported on the income statement, while contra asset, called accumulated depreciation, is reported on the balance sheet. Land is never depreciated, but other plant assets are subject to depreciation. To measure depreciation for a plant asset, we must know three things about it. 1. Cost. 2. Estimated useful life. 3. Estimated residual value. We have discussed cost, which is a known amount. The other two factors must be estimated and will be provided in exercises. In real life, companies have to estimate both the asset's useful life and residual value. Estimated useful life is the length of service expected from using the asset. Useful life may be expressed in years, units of output, miles, or some other measure. Estimated residual value, also called scrap value or salvage value, is the expected cash value of an asset at the end of its useful life. The book value of a plant asset is its original cost less accumulated depreciation. Accumulated depreciation is a contra asset that contains a running total of all depreciation expense for that asset over its lifetime. At the end of an asset's useful life, its book value will be equal to its estimated residual value. As an asset is used and depreciated, its accumulated depreciation will increase. As an asset is used and depreciated, its book value will decrease. Remember that an asset's final book value is equal to its residual value. Residual value could be 0, or it could be some other dollar figure. Now we have a few knowledge check questions coming up to test your understanding of this material. After I read the question, pause the video and try to answer it. Once you restart the video, I will be walking through the answer for the question. Let's go. The first question reads, book value equals the cost of the asset less the total accumulated depreciation. Is this statement true or false? The answer is true. The cost of an asset less its accumulated depreciation is indeed the formula for book value. The second question reads, which of the following is not one of the three things needed to measure depreciation? The choices are probability of obsolescence, cost, estimated useful life, or estimated residual value. The answer is probability of obsolescence. To calculate depreciation, you will need the asset's cost, estimated useful life, and estimated residual value. The third question reads, the accumulated depreciation account is an income statement account. Is this statement true or false? The answer is false. The accumulated depreciation account is a contra asset and will appear on the balance sheet with the assets. That concludes our review of the basics about depreciation. Thanks for watching.